Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 studios here in Mumbai. And, it's a big day. It was a big day yesterday with, of course, the election results center and front and center. Markets seeing a big tumble. The question is, will we see some stability from here on? So lots of facets, lots going on. And we'll discuss all of that here over the next 2.5 hours or so. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Okay, elections apart, can I gloat for just a second? What did I tell you all last week when we were anchoring the same show? June 5, the rains will hit Mumbai, and they have. Something positive to start with, right?
Well, that's right. Got absolutely drenched this morning in the rain. And normally, I think what market participants say is that when it rains for the first time in Mumbai, it's normally a good couple of days. So if you're looking for good news, and we're scrambling for some, actually, that could be it. You know, you have the rains that maybe this time on the expected lines, as per our expert here in the studio. But rains in Mumbai are normally a good thing, and let's see whether it plays out.
I think Nigel, rains anywhere are a good thing. Not too much though, right? I mean, you don't want, as we've seen in many parts. But yeah, you're absolutely right. It was getting too hot, was getting too sort of stuffy here. So that's a welcome relief. Overcast skies is what we woke up to. Well, let's just quickly sort of run you through just a couple of cues that you need to watch out for as we begin the day. So NDA is, if you're waking up, tuning in, NDA is, the tally from last night when you went to sleep and this morning is not very much different. So NDA is back to power for the third consecutive term. That is point number one. BJP, as it was the case yesterday when we sort of, finished late last evening, BJP fails to cross the simple majority on its own. That's point number two. The final tally which will come up, which is, of course, data from the Election Commission, because, the numbers were still updating late into the night. They'll come up you'll basically see where the BJP is at, where the NDA is at as well. That number around the 240 mark for the BJP. And of course, for the NDA, they come back to a power. The numbers perhaps should come up in just a bit from now. Now, this is the point is Modi-led BJP will be running a coalition government for the first time. And I think that is what is different. That was basically what the shocker was for the market yesterday as well. What the market will watch, and if you can move the graphics along, what the market will watch is essentially potential change. That's the number that one was waiting for. 234 for the sort of India alliance, the NDA at about 292, and others at about 17. Not, as I said, not very changed from last evening. Now, as I said, the Modi-led BJP will be running a coalition government for the first time, and I think that was the shock reaction that we saw. So far, for the last 10 years, they've not needed. It's always been a coalition, but BJP is single-handedly had more than 272 seats, and expectations were, exit polls, etc., were showing that they'd be far ahead of the 2019 tally, which is, of course, not the case. Potential changes will, we've not heard this word kingmaker and things like that, coalition politics and coalition dharma, for a long time, right? For 10 years at least. So I think those things come into the mix. So there is that sort of impact as well. Cabinet ministerial positions and how they will be need to be shared with these allies, with the TDP, with the JDU. Will they be? That need to be done? Most likely, yes. Will there need to be packages for states, special status for Andhra Pradesh, for Bihar as well, which of course BJP was so far holding back. I think those look likely now. So we'll see. Yesterday, Nifty was down about almost 6%. So the shock element reaction is in the price. I always say this, markets don't react to the same event with the same intensity more than once. So the one-time big reaction is kind of in the price. We sort of tallied up the flows last evening. FIIs in the cash market were sellers of $1.5 billion. 1.5, 12,400 something. So in yesterday's rupee, which was, of course, had also fallen, that's nearly $1.5 billion. In index futures, right, FIIs increased their net short positions. That number now stands at 3.55 lakh contracts. There was a bit of covering which we had seen between Friday and Monday when the exit poll, the markets reacted in a flourish to the exit polls, and that number has gone back, right back to 3.55 lakh net short contracts. What to expect from here? Consolidation, sideways consolidation more likely than not over the next many days. And of course, choppy moves as well. If you're thinking, there is a V-shaped kind of recovery in sight, and that most likely is the case. I don't think that is the base case at all. I mean, I think it'll be choppy, it'll be sideways. The market will continue. The shock element is gone, but the market will continue to digest how this new sort of, government will take shape, what shape and form, how they will function, how they will take decisions, etc. In terms of specific sectors, as said, large caps, defensive sectors could be in focus. I mean, I got a lot of questions about PSUs specifically, what to do with PSUs. And I think there, very simplistically put, some of the smaller, unjustified moves. I mean, to name, I'm not picking on one of this or that. I mean, names like Hindustan Copper, STC India, MMTC, where float essentially has been very, very low and moves have been, parabolic, 3x, 5x, 6x. I think, that part kind of cools off now. Whereas, I mean, you got, reasonably valued companies like Coal India, etc., where I think, some stability, etc., will return. I'm not talking about here and now today, but I think that's the differentiation to make broadly as far as PSUs are concerned. I just want to make pulling back a little bit, one point. History shows that, be it a majority government, be it a minority government, not minority, but a coalition government, I mean, the growth largely remains on track. And just to remind you, between 2004 and 2000, essentially the UPA years and 2000 the UPA 1 and UPA 2, the average, not the average, but the CAGR growth rate was about 6.8%, right? I mean, this is comparable, maybe some would say, depending on how you measure it, even better than what we've seen over the last 10 years. So you've got to keep that bigger picture in mind. If, as far as levels are concerned, yesterday, of course, was a big swoon. Keep the 40 weekly average in focus. That number is 21,365 on the downside. That's around yesterday's lows as well. And the resistance broadly, it's a range, but should come up on your screen, 22,270 to 22,628. So that's roughly where we find ourselves at. The GIFT Nifty is implying a higher start, about 0.6, 0.7% up. But I would say it's going to be not a big V-shaped move. It's going to be measured. It's going to be a little choppy. And the market will take some time to settle down. Surabhi.
Oh, well, absolutely, Prashant. I think we have to navigate a lot of these deeper questions. And I guess for people who've entered this market in COVID, this is the first real deal that this is not a market which can keep going one way, which has been the case in the last 3 years, right? So in for interesting times, just very quickly, to recap the tally first to begin with, because that's the big number that, really matters. So NDA 292, and within that BJP 250, the TDP at 16 and the JDU at 12. Now, before I get to market cues, political cues remain extremely important. So just an outline on the meetings today. There's a cabinet meeting at 11:30. We need to track that. Then Mr. Chandrababu Naidu as well as Mr. Nitish Kumar, they're expected to be in the capital. There is an India Alliance meeting happening, the INDIA meeting happening later in the evening as well at 6 p.m. yesterday, when Mr. Rahul Gandhi was asked whether the India Alliance will look at government formation. He was absolutely tight-lipped. He said, I will speak, but after that 6 p.m. meeting. So politics is still very much center stage. That's point number one. Now, coming to yesterday's action, that massive slide that we had yesterday, the low, just to keep that on the radar, was 21,281, and completely in sync with Prashant that, perhaps that shock and awe part of the fall perhaps is over, because even yesterday we had a 600-point recovery by the time we closed out. The issue is what now? Do you still build up a little further if the assumption is that the NDA manages to come back somehow? So that's what we'll have to navigate. The sell numbers we've discussed, the selling was both FIIs and DIIs yesterday, one of those rare occasions, and those are big, large numbers in rupee value that are on your screen, 12,400 odd crores, and that remains the critical question. FPIs who've been on the outside, and for once they've actually got it right. They were never, super heavy into the market going into the event. They were always sitting on the sidelines, always very, very edgy. And, they seem to have, got it on the right side this time around. What domestic institutions do from here on, that's going to be the question. And that's why I've put up those indices. These have been the poster boys of Modi 2.0, the CPSE index, the PSU index, the PSU bank index. Now, in yesterday's carnage, they are off between 15 to 17% from the peak. And for me, that remains the biggest question. Will there be tactical shift of flows away from this side of the market? Not just the stocks which are low float, the ones that Prashant alluded to, your SCIs of the world or the MMTCs of the world. That's perhaps a very normal given. But will fund managers move money away? Will the ship start to turn away from capex and PSU to defensive, to something else? And we'll ask this question to, I think, all our guests who come on the channel today. Just to come back on global cues, for what it's worth, should keep that in mind as well. And they're actually pretty okay. We had minor gains on Wall Street between 0.1% to 0.3%, depending on which index you're looking at. It's all about the jobs data. The main report, obviously, the payrolls report comes out on Friday. But today we have the ADP employment report. That will be in focus. And the JOLTS number came out yesterday. The market was reading sort of into that as well. There's good news on yields because yields continue to cool off. The US 10-year is now below 4.4%. In fact, 4.3 something. Last I checked, 4.34. The dollar is also a fairly range. And the good news on oil also continues. Brent is below the 78 handle quite firmly. In fact, about 77.5 last I saw, correct? And that's because you had a further buildup in US inventory. So the global setup is fine, but we still have to navigate the much, much bigger queue, which is what is happening with us in terms of politics, the here and now.
Well, I've been speaking to market voices, not just today. I speak almost on a day-to-day basis, even the weekends at times. And I like an analogy that one of the top investors put to me today. You know what he said? He said corporate India is doing well, and the government of India is run like a professionally run corporate. So you may have your differences, but ultimately the goal of the corporate is same, right? To progress, to do ahead. And in fact, when you have a tall leader at the top, things look good. So he said, put all this together and things will look up for the government in the time to come. That's the way he put it early this morning at around 6 a.m. How is trade setup looking? The worry is that the FI is sold in cash big time. Though they've added some shorts as well, which hasn't been such a bad thing. But this time, I think their action in the cash market is going to give us direction from here. I think in the near term, the Nifty could trade at a bit of a range, but I'm more concerned about what's going to happen in the broader markets because some of those stocks got pummeled in yesterday's trading session. 10-15% actually looking a little less. Some of them were down even at lower circuit with no exit because they're cash market stocks. The maturity of a domestic investor is going to get tested. And here's where you come. You need to show some maturity. You're in for the long haul. And that's why you need to keep those SIP numbers coming in. What did the FIs do yesterday? There was a swing factor of close to 1.4 lakh contracts. Unbound long positions and the added short positions in trade yesterday. And that's why the short positioning moves back up to around 87% from around 72% on. And if you pull up a chart, you'll see that we were net short, the FIs with, close to 3.2 lakh contracts on the short side. They got stumped out. But now, post the election verdict, they've come back big time. And now the short positioning, if you adjust it, because of the change of the lot side, it's the highest that we have seen all the way since November. So a net short market, normally you like, but this time around the FI flows are going to be important. The cash market flows, both the FIs as well as the domestic market. What about the clients? They have been getting it right. In fact, in yesterday's trade, the clients, that's the large HNIs and retail, they went ahead and they added long positions. So they increased their long positioning in yesterday's trading session, as you can see, from 1.9 to around 3.3 lakh contracts odd. And they have been getting right. So just want to put that on the table. And on stock futures, actually, both the FIs as well as the clients, they are net long. 5 lakh contracts of the FI, net long contracts on stock futures. And also, if you look at, clients, close to 17.5 lakh odd, it was around 19 lakh odd. So they've, come down a little bit from the top. What are the levels you're looking at? For me, the 200 EMA is going to be very important, both on the Nifty as well as the Nifty Bank. Yesterday, we almost went to that level on the Nifty itself. So, that's the line in the sand. On the downside, you don't want to see the 200 DMA getting broken. For the Nifty, upside, well, that 22,400, 22,500 becomes a bit of a resistance zone. Because that's where, in fact, you have the 20 as well as the 50 DMA. So that's going to be the important mark as well. Just one point. Yesterday, you saw consumption themes. That's the FMCG themes. Do much better than some of those infra-related themes. And in the last 1 year or so, you've seen a big growth performance from the infra themes. And I was looking at a Nuvama note today. They're saying that the valuations of industrials, now they have, in fact, converged with the FMCG names. So maybe in the near term, the risk-reward could be favorable for some of these FMCG themes, with, in fact, focus on consumption rather than capex. But do what's in your hands, and what's in your hands is your SIP. So maybe, in fact, keep that going. Not maybe, keep that going and show faith in this market. It's, in fact, for the longer term, things, should work in your favor.
Okay, well, those are the cues, and we'll keep analyzing them as we go along. Let's start with some calls that we're getting on the market. To begin with, we're actually getting you a money market view because the money market was also reeling under the impact of this absolute unexpected outcome. We have Pankaj Chitlangia of First Bases who says that yesterday the USD INR rose to a high of 83.55, erasing all exit poll gains. He says despite near-term political uncertainty, India's macroeconomic stability remains comfortable with a healthy growth inflation balance and correction in twin deficits. He expects CPI inflation to drop to 4.5% and the current account deficit to remain at 1% of GDP in the current financial year. He says based on the big picture and the support by their bearish view on the dollar globally, he believes that the USD INR shall remain below the 83.78 resistance level. He says a rise above 83.78 could push it to 84.20.
Okay, well, on bonds, we have Ajay Magnolia of JM Financial, who says that amid the surprise and unexpected election result jitters, benchmark bond yields spiked by 11 basis points, even as crude oil prices and global bond yields are softening. He says market awaits the RBI policy announcement this week. He expects the 10-year benchmark bond yield to trade in a range of between 6.98 to 7.07% today.